The rate which banks lend to each other has been plummeting in recent weeks as the effects of the ECB's cheap loans lubricate the system. We're going straight to the source of the Interbank lending numbers, and I'm joined by Cedric Quemener, who is the Managing Director of the European Banking Federation. Cedric, the last time we spoke in October, you said interbank lending was very stressed. How would you describe the situation now?
That's an interesting question, actually, especially in those days. We are probably... that's a personal opinion, but I believe that we are at the end of the very positive impact of the ECB LTRO operations. So you can, when checking the markets nowadays, you can feel again some stress coming back into the market. Now, the real question is why is it? Because basically they are full of liquidity in the market. No one needs, there are really a lot of liquidity thanks to the ECB mainly, because as you know, the interbank markets are quite, I would say, low. Now, beside this, the real problem is probably the fear from the market about, first, as usual, the European economic governance efforts, which are so far not that developed and still weighted by the market. And also some, I would say, more macro and political fears regarding, especially, Holland, as you know, because of the political troubles out there, and France also. Now, my conclusion is we are still in the same mood regarding the sovereign debt market than we were 2 years ago. And that is mainly because, on an economic governance point of view, neither the European nor the different countries being part of the Europe has really reinsured the market. And that's a kind of trouble.
The rate to which banks are lending to each other in euros has dropped sharply. With familiar problems resurfacing in the Eurozone, do you think the rate is going to creep back up?
No, I don't think so. Actually, I don't think so. What I do believe is that if the price is that low, it's mainly because there are plenty of liquidity into the market, so that money is basically very cheap, right? And the second point is, all this liquidity is not coming from banks, which, as you know, and we spoke about the last time, are absolutely struggling with the ongoing regulation, which basically force them to I would say, to block some money into the top of the asset and liability scheme. And basically, so they don't have that much cash to lend or to borrow. Now, there are a lot of liquidity to the market that mainly comes from the ECB, and that explains the very low level of the interest rate fixings nowadays. So why do I say that I don't think that it will be different in some days? It's the liquidity. We still have a lot of, a huge excess of liquidity into the market, so it probably means that the price won't rise again. That's the first point. And the second point is there is a very slight link between the interest rate evolutions and the macroeconomic situation. There's definitely a link, but not when you have that much excess liquidity into the market. So that's why I'm not absolutely sure, I'm not convinced, basically, that the Euribor rates or even the others will have a different trend in the coming days and weeks, because there are still, don't have figures with me right now, but there are still a lot of excess of liquidity into the market. So basically, the money will still be very, very, very low.
Is there such a thing as too much liquidity, because there's more than €1 billion from the ECB floating around?
I don't say there's too much, I just say there's plenty enough. So, bankers always need liquidity. It's very important for financing the real economy. Now, let's say that the action of the ECB was very, very positive for everyone, but once again, it was not a gift to the banks, it was a gift to the economy through the banks, which is something really different, and I want to stress that out, because as you know, most of our citizens and politicians think that it was just a gift for banks, which is absolutely wrong. There was a very nice move to fulfill the ECB mission statement, which is price stability, basically. Now, this has been used quite a lot by banks, as we all know. There are still some liquidity into the market, way enough, and therefore, I don't think that there's really a stress on the price of liquidity nowadays into the market. The real stress is on the bond. So I don't think that this trend will really evaluate in the coming days. I don't have, and that's once again a personal analysis, but I don't see on the market any really corner, any really point where it would change. Liquidity is far enough, and the need for liquidity is just stable. So no, I don't think that the price will rise again. Not in the coming days, weeks, let's say.
Okay, thank you, Cedric. And the EBF have just struck an agreement to base the Euribor rate on real-time trades, which will make it even more accurate. That's all from me for the moment, but there's plenty more to come here on Dukascopy TV, including reaction from last week's Geneva Forex event. But for now, goodbye.